American Express beat its Q3 earnings by a lot, but still the stock is down 5%. American Express is a Buffett stock. It is very conservatively managed, it is a constant growing company, and that with very little debt. I'm showing you why I'm buying more Amex after this Q3 release and why the market is just completely irrational. First of all, what probably caused the sell-off is the 6% growth in total network volumes, which basically is all the money that is being sent over the network on Amex. 6% is fairly low growth. It has decelerated quite a bit from the highs, but this is only a temporary issue. Amex is still growing overall. Overall revenue grew 13% and net income grew 30% despite an increase in provisions. Provisions is basically money the company puts back for credit defaults, because Amex is a bit different from Visa and Mastercard. While Visa and Mastercard don't lend out their own money, they only cooperate with banks and provide the card network. Amex actually lends out their own money. Earnings per share grew 34%. As always, Amex buys back shares, 2% buyback. Amex always buys back shares. The share buyback ratio is always between 4 and 2%. One great thing is also that net write-off rates and delinquencies have stabilized. They're also both still below pre-pandemic levels. Especially the delinquencies are very, very low right now, and they're already very, very stable. Write-off rates maybe go a bit higher, but so far they have stabilized, which is really great. But Amex is still building a lot of provisions. They're building up reserves just in case something goes wrong. They're running this business very, very conservative. And while yes, currently the network volume has slowed down, people are still getting new Amex cards. Around 3 million people in the last quarter got a new Amex card, and that is fairly stable. It has its up and down, but it sits at around 3 million usually. Now you think, why is it important that the network volume grows overall? And why is the market so upset that it only grew 6%? This is how Amex makes its money. Most of the money comes from discount revenue, which is basically you paying with your card somewhere and the merchant is paying a fee to Amex. That makes up 55% of revenue. When the volume only grows by 6%, then of course it's only gonna go around 6 to 7%. Card fees are also very high at Amex. They make up a lot of money there. You probably know Amex is way higher fees than the other companies. They're more aimed at higher income people. Interest income is also up a lot just because they have a lot of cash sitting around. If we look at net cash, we can just see the companies deleveraging year from year to year, and we can see that is continuing. They now have 44 billion in cash on hand, while only having 46 billion in debt. So they basically have no debt net. And all of this debt, that only matures in a few years ahead, when they're still paying the lower interest expenses from before. And on this cash, they're able to earn fairly high returns right now. Now, where's this slowdown coming from? It is mostly coming from commercial services in the US. They basically didn't grow at all. The US consumer still fairly strong. International consumers and corporations, they're bringing the growth to Amex right now. Issue is, it only makes up 20% of the business, but it is great that they're slowly diversifying away from the US with that. They're not that reliant on US consumers and corporations anymore. So overall, once US commercial spending is gonna pick up again, then Amex is gonna go through the roof in my opinion. They like to map out a bit when it comes to US unemployment rate forecasts and GDP growth, but it is not that important, at least not when you're investing in the stock. You would look in the long term. Long term, Amex is a company that is greatly managed, low debt. Amex is a free cash flow machine. This does not include the latest quarter, but you can see they're pumping out around 15 billion in free cash flow right now on a 100 billion market cap. And revenue, as you can see, it is just in a constant uptrend. Nothing really slows down Amex. They're a conservatively run business. And for the last few years, they have been using this free cash flow to deleverage the business. You can just imagine what happens if they finish their deleveraging, and then that cash is gonna go back to shareholders. Now when it comes to valuing Amex, let's say they are gonna continue to be at a free cash flow per share of 19 despite the increase in the latest quarter. Growth rate of 10% and 9% after that. Those are fairly low growth rates. You gotta think about it, 2% buybacks are almost guaranteed. That would only include 8% revenue growth and 7% after that, and that is very unlikely to be that low. But let's just have it like this. Multiple of 15 for such a great business. I think that's fair. Payout ratio of 12% in dividends with a little discount due to taxes would give us a present value of $265 a share. It's currently trading at 142, that is an upside of 87%. This is why I like Amex so much. It is a very great business, fantastically run, high upside, low downside, even if a lot of stuff goes wrong in the business. Let's say they cut the dividend to build up even more reserves, growing only at 7% and 5% after that, only a 10 multiple, we still make money on this stock. And even if growth accelerates a bit to 12 and 10%, it's gonna go to 311. So overall, I just don't see a downside in the stock. It is a fantastically run business. I know why Buffett loves it. It is my biggest position. I'm gonna continue to add to it. What do you think about Amex? Write it down below. Have a good day.